Let's bring in Matt Bloxham from Bloomberg Intelligence, who's been covering tech themes for us. So we'll start with OpenAI and move on to Nvidia. Very good to speak to you then Matt. Where does this take us, other than back to where we started with a lot of added complexity on OpenAI? We have moved, though, so take us through what's changed.
Yeah, I mean, I don't think it takes us fully back to where we are, and so maybe in the short term it feels more complex, but I think the aspiration is to make a kind of simpler structure of the business. It's been a very complex business with this not-for-profit structure, with a profit-making entity, which is where Microsoft's invested its money. So I think what I'm kind of reading is that this new board is an interim board. You know, it's clearly a very heavyweight board with lots of economic and commercial and public company experience, but its goal or mission is to identify a much bigger up to 9-person board that would potentially include Microsoft as a board member, and they haven't had a board seat up until now, which would give you, I guess, a more classical, kind of corporate governance structure that expect from a company that's planning to go public. So I think the complexity maybe will kind of give way to a kind of a clearer framework that public investors can feel more confident in.
And maybe address some of those governance concerns that some had flagged at OpenAI. And worth noting as well, given that Larry Summers has been appointed to the board, that Larry Summers is a paid contributor to Bloomberg TV as well. The other big focus before we came in this morning and OpenAI broke for us was Nvidia and the earnings that came through. Again, smashing past the earnings, a little bit of disappointment, at least from the investor community.
Yeah, that's right. I'm struggling to remember all the numbers. Yeah. Everything else that's going on. But yeah, I mean, they've guided to 16 billion of revenue for the quarter that's reported. They actually delivered 18 billion. The forward quarter consensus was looking for 18 and they guided to 20 billion. So big beats. The gross margin was a lot better too, a 20% beat on earnings, and yet the market's a bit disappointed. Why? I think there's lots of questions on the call around what's the sustainability of the demand. If it's just like a flush of kind of people scrabbling to get AI capability, it's all going to die away. The company is saying they're kind of very confident in the demand for the next kind of year or so at least, with multiple sources of new end markets coming on stream. They're trying to downplay the risks around the China constraints. They're also trying to downplay the risk of new rivals, people like Amazon and Microsoft developing their own AI chips. That will come. The market will get tougher, but they're trying to signal that there is plenty there for everybody, and that I think probably earnings will go up, certainly for Q4, but definitely for 2025. The consensus expectations, I think, are going to go up for 2025 too.
Okay, demanding expectations from the market then. Matt, thank you very much. Matt Bloxham from Bloomberg Intelligence with the latest on those tech themes.